Welcome back to Boss Economics World, the only place on the internet where we slice through the economic baloney served up by policymakers and serve you the raw, unfiltered truth, spiced with a hefty dose of satire, of course. I'm your host, the guy who's been yelling into the void about government mismanagement since the days of dial-up internet, and today, oh boy, do we have a doozy of a story to unpack. Grab your coffee, your calculators, and maybe a stress ball, because we're diving headfirst into the Federal Reserve's latest circus act, Donald Trump's tariff tantrum, and the economic dumpster fire they're both fanning. Spoiler alert, it's not the Fed's, patience, or Trump's art of the deal that's causing this mess, it's their collective inability to manage an economy without setting it on fire. Let's get into it. So, here's the deal, folks. The Federal Reserve, that sacred institution of economic wisdom, has decided to keep interest rates parked at a cozy 4.25%-4.5% range for the third meeting in a row this year. Why? Well, according to Fed Chair Jerome Powell, there's no rush to change anything. Meanwhile, Chicago Fed President Austin Goolsbee is out here on NPR's Morning Edition saying, we're still kind of holding our breath, as if the economy is a suspense thriller and they're waiting for the jump scare. And then we've got San Francisco Fed President Mary Daly preaching patience like she's auditioning for a mindfulness podcast. Patience, huh? Sounds more like paralysis to me, but hey, I'm just a guy with a microphone and a grudge against bad policy. Let's break this down from the surface to the core, shall we? On the surface, the Fed's inaction might seem like a prudent move. After all, inflation data from April 2025 showed consumer prices rising at a less than expected 2.3% annually, the smallest increase in 4 years. Sounds like good news, right? Wrong. Dig a little deeper, and you'll see that this tame reading was mostly due to a drop in food prices. Strip out the volatile stuff like food and energy, and the core inflation rate is still simmering at 2.8%, well above the Fed's sacred 2% target. So, while the Fed is busy patting itself on the back for declining inflation, the reality is that the underlying pressures are still hot enough to cook your grandma's famous lasagna. But wait, there's more. The Fed's hesitation isn't just about inflation, it's about the total chaos unleashed by Donald Trump's tariff tsunami. You see, the Trump administration has turned trade policy into a reality TV show, jacking up import levies to record highs, then suspending or exempting them at random, like a kid playing whack-a-mole with the global economy. One day, electronics are spared, the next, pharmaceuticals are in the crosshairs. And the Fed? They're just sitting there, scratching their heads, trying to assess how this roller coaster of uncertainty will impact prices, growth, and jobs. Newsflash, Fed folks, uncertainty kills confidence, and confidence is the lifeblood of economic activity. But hey, why rush to conclusions when you can just hold your breath and hope the data magically sorts itself out by September 2025, right? Now, let's zoom in on Trump's tariff obsession, because this is where the real clownery kicks in. The Trump administration's trade policy has been a masterclass in self-inflicted wounds. According to the U.S. Census Bureau, U.S. imports from China, the primary target of Trump's tariffs, fell by 20% in 2024 compared to pre-tariff levels in 2017, while the U.S. trade deficit with China actually widened to $420 billion in 2024, up from $375 billion in 2018. Why? Because tariffs don't fix trade imbalances, they just make everything more expensive and disrupt supply chains. A 2025 study by the National Bureau of Economic Research, NBR, found that Trump's tariffs cost U.S. consumers an additional $40 billion annually in higher prices, with the average American household shelling out an extra $800 a year. And guess what? Those costs are hitting the poorest households the hardest, because they spend a larger share of their income on tariffed goods like clothing, appliances, and, yes, pharmaceuticals. But it gets worse. Fed Vice Chair Philip Jefferson recently admitted that these tariffs are likely to interrupt progress on disinflation and generate at least a temporary rise in inflation. Translation: Trump's trade war is making the Fed's job harder, and we're all paying the price, literally. Just look at the latest data from the Bureau of Labor Statistics. BLS import prices for tariffed goods rose by 15% in the first quarter of 2025, directly contributing to that sticky 2.8% core inflation rate. And don't even get me started on the supply chain chaos. A 2025 report by McKinsey & Company found that 60% of U.S. businesses reliant on global supply chains have faced delays, shortages, or cost increases due to tariff uncertainty, with industries like manufacturing and agriculture taking the biggest hits. Oh, and let's not forget the ripple effects on employment. Remember how Trump promised tariffs would bring back American jobs? Well, according to a 2024 analysis by the Peterson Institute for International Economics, the tariffs led to a net loss of 142,000 U.S. jobs by the end of 2023, as higher costs crushed small businesses and exporters. Fast forward to 2025, and the situation hasn't improved. U.S. manufacturing PMI, Purchasing Managers Index, data from the Institute for Supply Management shows a contraction in activity for 6 consecutive months, with the index dipping to 48.2 in April 2025, below the 50 threshold that signals growth. But sure, let's keep pretending tariffs are winning while American workers and consumers lose. Now, here's where we get to the juicy part, criticizing the government's management, or rather, mismanagement, of this whole mess. Let's be real, folks, the Fed's paralysis and Trump's tariff tantrum are two sides of the same coin, and that coin is stamped with incompetence. The government's inability to provide a coherent, predictable economic framework is the root cause of this looming recession. And yes, I said recession, because all the signs are there. Just look at the latest GDP data. U.S. economic output contracted by 0.2% in the first quarter of 2025, marking 2 consecutive quarters of negative growth, the textbook definition of a recession. Fed Vice Chair Jefferson tried to brush this off, claiming the contraction was distorted by import data, but come on, man, who are you kidding? The Conference Board's leading economic index, which predicts future economic activity, has been declining for 12 straight months, hitting its lowest level since the 2008 financial crisis in March 2025. Wake up and smell the recession, people. And it's not just the numbers, it's the sentiment. Fed officials like Mary Daly are out here saying, people feel like the economy is doing fairly well, but are they talking to the same people I am? Because when I look at the University of Michigan's Consumer Sentiment Index, it's down to 65.8 in April 2025, the lowest since mid-2022, when inflation was raging at 9%. Households are pinched, businesses are nervous, and international tourism, a $200 billion industry in the U.S., is tanking, especially in states like Nevada, where Las Vegas is practically begging for visitors. But sure, let's just resolve the uncertainty, and hope everything magically fixes itself, right, Mary? Here's the kicker, folks, this isn't just about tariffs or interest rates. This is about a government that's too busy playing political theater to actually govern. The Fed's refusal to act decisively, either by cutting rates to stimulate growth or hiking them to crush inflation, is a direct result of the uncertainty created by Trump's erratic trade policies. And let's not forget Congress, which has done absolutely nothing to counteract this mess. Where's the fiscal stimulus to help struggling households? Where's the infrastructure investment to boost jobs and productivity? Oh, right, they're too busy arguing over culture war nonsense while the economy burns. Just look at the global context. The International Monetary Fund, IMF, downgraded its 2025 global growth forecast to 2.8% in April, citing heightened trade tensions as a primary driver. The World Trade Organization, WTO, reported a 5% decline in global trade volumes in 2024, the sharpest drop since the 2008 crisis, and warned that ongoing tariff escalations could shave another 1.5% off global GDP by 2026. Meanwhile, countries like Germany and Japan are already in technical recessions, with GDP contracting for 2 straight quarters, and China's growth has slowed to 4.5%, its weakest pace in decades, thanks in part to U.S. tariffs. This isn't just a U.S. problem, folks, it's a global crisis, and our government is the arsonist holding the match. So, where do we go from here? Well, financial markets are betting the Fed will finally wake up and cut rates by September 2025, but don't hold your breath. Even if they do, it might be too little, too late. The damage from tariffs, supply chain disruptions, and declining consumer confidence is already baked into the economy. Goldman Sachs recently projected a 40% chance of a severe recession by the end of 2025, up from 25% just 6 months ago, citing trade policy uncertainty as a key risk. And with the 2026 midterm elections looming, you can bet the government will double down on populist gimmicks like tariffs instead of actual solutions. For ordinary folks like you and me, this means higher prices, fewer jobs, and a whole lot of economic pain. For finance professionals watching this video, it's time to start stress testing your portfolios for stagflation, a toxic mix of stagnant growth and persistent inflation that's looking more likely by the day. And for the government? Well, I'd say it's time to get your act together, but let's be real, they're too busy auditioning for the next season of economic dysfunction, the reality show. And that's all for today, folks. If you're as fed up with this economic circus as I am, hit that like button, smash subscribe, and leave a comment below telling me how the government's mismanagement is screwing over your wallet. Until next time, keep your eyes on the data and your hands off the panic button, unless you're a Fed policymaker, in which case, panic might be the only rational response. This is Boss Economics World, signing off.